After failure to delist, the street is going to be focusing their eyes on capital allocation, on debt reduction plans or debt repayment plans rather, and also dividend payment plans considered by Vedanta and its parent Vedanta Resources. This after of course the street is able to get through the short-term technicalities associated with Vedanta's failed delisting. This will largely involve the 125 odd crore shares that have been confirmed bids or bids that have been tendered in for the purpose of this delisting. Remember that with these shares having been tendered in, the investors of these shares or the holders of these shares are not going to be able to sell them on the equity markets until they are not released to them. So I guess in the next couple of days, these shares will be released to the shareholders, and that's when really the shareholders will be able to either continue staying on with them or consider selling them in the equity markets. Currently, of course, there are very few shares that are freely available in the equity markets, which may have explained the cause of that circuit down that we saw in the stock price. But getting back on the fundamentals, we do know Vedanta Resources has a mammoth debt on its books. It further amplified that debt when it took on board that $3 billion loan. So now the question is, what's the next step for Vedanta? Will the promoters essentially consider a buyback so that perhaps the next attempt at delisting will be a little more easier, may end up being successful as well? Will they consider giving a dividend to the shareholders? Both of these options will be positives, mind you, but CLSA does say that a negative could be any sort of inter-corporate loan, and of course disclosures with respect to the same will be required as well. That's going to be a key negative for minority shareholders, and that's something that investors should watch out for according to CLSA. They, by the way, have cut their target price to 118 rupees. Further, they as well flag off that debt reduction will be very closely watched out for. How will Vedanta sort of repay the debt obligations that are due in the next couple of, that 1 odd year? Further, Investec also says that the management's ability to restore the minority shareholders' confidence is key to sort of retaining or the re-rating trading multiples, and they find delisting as an additional scar in addition to the recurring corporate governance issues. Also, there was an Economic Times report that stated that SEBI may ask BSE to probe into those 12 crore unconfirmed shares during this delisting process to verify the source of this. So, as an investor in Vedanta, these are, some of the overhangs that you'll have to sort of keep your, keep in mind. Because I guess that's where the focus will be on, more than operational performance, capital allocation, all of these issues with respect to delisting. That's really where now shareholders of Vedanta should divert their attention to rather than operational performance.